Hello everybody, this is Brent from Enter Your Wealth, and I'm so happy that you're here today because we're going to go over what has happened in the market today and what is happening this week. It is some big news, so let's see what is happening here in the sticks. So let's start with the overall sectors. As you can see, the financials did quite well today. Communications about 0.52, and technology just getting a little bit hammered here, down negative 0.56. So let's look at some of the macro things that have been happening, such as the put call ratio, guys. So put call ratio has been telling us that there have been a lot more puts being brought into the market. Typically when this happens, this really means that typically this means that the market is starting to become a little bit greedy to the downside, and maybe this can be signs for reversals. As you see, when we have these like huge gap ups where we're above the one by like a significant margin, there's a lot of puts being bought up, but then you see the following days it actually comes down quite hard. So this can be kind of a leading indicator to see what is going to happen next in the market, as we've kind of had this little sideways day, but kind of skewing towards the downside in my opinion. And we can see this on the VIX as well. So the VIX is the fear and volatility index. This is something that we look at all the time because we know this will kind of tell us how much fear is in the market. And it's like the famous Warren Buffett quote goes, be fearful when people are greedy and greedy when people are fearful. As you can see, the high odds plays typically were in these high ranges, but also if you weren't shitting yourself a little bit in this part of the market, then you really are a sick trader. And I think really being able to gauge this matters a lot. This is based on the options volatility on the S&P 500, so you can see that the premiums are going upward. Usually when we're closing below the 20, this is signaling to us that, the fear is coming down. And, we are coming down from these highs, but really this is kind of unusual. This was a lot of things hitting in like Omicron and various other things such as Evergrande defaulting and the tapering that we're going to figure out how bad it's going to be here soon, and the interest rate hikes. Also, it's triple witching, or is it quadruple witching? It's either triple or quadruple witching hour or witching day this week. So there's going to be increased volatility in the market. So I think this will still stay kind of above 20, but possibly after that we might be coming back down low. Either way, it's kind of a day trading and scalping market, guys. So if you're not a day trader or a scalper, if you're doing swing trading, what a common sign here is that if we're above the 20, it's really just not great for swinging because things are just kind of too risky. They skew to the downside. So it's important to note that if you are a swing trader or not. That's kind of a hard lesson to learn because swinging is typically something that is considered to be, a little bit more safer than day trading or scalping, but in this instance, it is really not. Okay. So let's go to some of our favorite stocks, and we're going to go into some crypto too, guys, because I know that is something that a lot of people are talking about as well. But first off, let's look at the SPY because, the SPY is going to tell us kind of what is happening in the broader market. Same with the NASDAQ and the IWM. All right, so with the SPY, you see that we've had kind of various phases here, and this is the weekly chart. Actually, the daily chart will tell us more of what is happening in a smaller time frame. We had this really corrective dip, rocketed off really hard, actually, just a lot of green days, right? And now we've kind of been entering, as soon as we kind of slowed down in the momentum, there's a little bit of a dip, and then we couldn't break any new highs. So at this point, we were kind of in this sideways market, and then we finally chose a direction, and it was to the downside. This was kind of the black swan event, the Omicron and the tapering, right? But as we've gone up, it actually wasn't enough to reclaim a new all-time high. This is technically an all-time high, but it's not a strong penetration, guys. And typically what I mean by a strong penetration, we look for a 1% or 3% penetration, or like increasing value of the previous high, or like this could also be applied to a support or resistance. So 1% past the support or resistance. That signals a lot more strength in the closure, because closures are one of the most important things in the stock market and really all financial markets, because they signal for either a continuation. It could be a false breakout, but we're looking for that continuation a lot of times. So what is important to note is we had this huge run here, and I think we see it better on the 4 hour. Yeah, so look at the 4 hour. We had the gap up on this day, and look, the gap has filled on the following 4 hour on these 4 hour candlesticks. And that might be all that we're getting out of this dip, and then maybe we're going to start rocketing off. But it's important to know that when we have these gaps, they typically close, in the first 3 days. That is just some broader statistics. Especially, that's just on the SPY, by the way. Some gaps don't fill. It just really depends on the stock or asset that we're talking about here. All right. So, but what does this mean? This typically could be the start of a new run here. We've got that rocket up. It was a little bit too fast, and we're like, okay, we're going to get this kind of retest and then try to test this again. And what I like to say is like 3 strikes, you're out. So, we've kind of hit this mark 3 times. For some reason, it seems like the 4th or 5th time when we hit a resistance, and this is kind of an anecdotal thing, but it just makes it so much stronger when the penetration actually happens. So, the longer the range, longer the consolidation, the stronger the upside potential. That is just some basic technical analysis. So that is something I'm looking for. As soon as we get this closure here, or even to the downside, it's going to be a pretty significant closure. It's going to signal to a lot of traders that we are going to go and enter a bull run. And also in a seasonal perspective, we are also thinking that Santa Claus is coming to town, as there is kind of a Santa Claus rally coming up soon. All right. So that's kind of the analysis on SPY, as I think that is something that we need to keep in mind. And let's look here at the NASDAQ, because the NASDAQ is telling a little bit of a different story here. And that's because it's weighted more towards tech, as we've seen like Tesla and Apple come down quite significantly today. Is this a bullish hammer close? I don't know, right? So we have to figure out kind of what is happening next here. There's really a lot more weakness in the NASDAQ, as with interest rates and tapering, we're going to see a lot more of a hit in the growth stocks. So that's just kind of what is happening here. There's nothing really to say about this, more so that there's just weakness in growth stocks and even small caps. So look at this. So the IWM had this year-long consolidation, and you can see it's kind of crazy. Like, this is literal levels from February 21st, so almost a year that we're at. And we had this nice breakout, but unfortunately the black swan event kind of shot us down. And when we see the IWM not typically performing too well, it's not really saying that the whole market is doing well. Obviously the certain markets are doing well because the SPY is doing well, and it's really just the large caps that have been doing well, the big tech companies, essentially. And we saw that now that the NASDAQ is getting hit, it's expected that IWM will be. So, when there's a lot of strength in the market, it's like the NASDAQ, the IWM that are really doing well as the SPY. The SPY typically just always does well. All right, so that's just an important thing to know. So let's move to some crypto here. So there was an Elon Musk tweet that came out, I believe like last night, maybe around this time even. And we kind of saw the price action reflect that. You see this huge candlestick out of nowhere, actually going up 21%, going up to 21 cent. I think this is about, almost, if you caught that top, look at that, about 43%. So yeah, I guess follow Elon Musk, guys. This is pretty much the most important news that we saw here. And it was kind of like a breakout, right? But you can see that it was short-lived. Really just algorithms probably going off Elon Musk tweets, as that has been something that has happened a lot in the past. So Bitcoin Has anything really changed with Bitcoin? As you can see, I drew this trend line quite a while ago, and I was kind of out of this market. We had this flash crash, and I knew if we could never reclaim past this trend line, we're going to kind of be coming downward. In the overall scheme of things, this doesn't necessarily mean we're bearish in any way, shape, or form, but we might have to draw a different trend line here. Maybe this one will be a little bit different, but I think that this like nice 45-degree trend line looks really great, and 45 degrees is the best angle for trend lines. If you didn't know, it's the most valid. Something like this, it's a little bit too flat to be even called a trend sometimes, and then when it's too when the slope is too aggressive, it kind of signals that it's a little bit unsustainable for a trend line. So that's why the 45 degree is usually the most valid here. But as long as we stay below this and we don't pass this 40,000, it's kind of just going to be a consolidation. And the $1 million question is it a continuation or is it going to be a reversal to the upside? And a lot of people are very worried because, you know, a lot of people have their eggs in one basket in the crypto market, and they were expecting this rally to happen. But you know that the reverse is always going to happen with sentiment. Is the market going to just start pumping because people want it to? Of course not. It actually does the opposite. And a lot of the big Wall Street analysts, they took sentiment just as a way to, you know, reverse it because they know that's the money. That's the way they can make the most money. These liquidations that happen on Bitcoin made some people a lot of money, right? That being said, Ethereum is looking a lot better than Bitcoin, in my opinion, although it is showing the same weakness, but it was kind of lagging behind. There's a lot of people who are like, oh, is it a new alt season? But look at this now. We're starting to show a lot more weakness here. And when we see more weakness in these alts, and it's not just the Ethereum, which is, you know, what I think is probably my favorite cryptocurrency in terms of what it's capable of, you know, everything else is going to follow. So is this kind of an early sign that the crypto market is going to start going down? It's too early to tell. It's kind of similar. If we hold this 3,000, then I think things will be okay with, you know, Ethereum as well. We want to be holding higher levels, obviously, but, you know, there's a lot of speculative ideas now with the crypto market. Anyways, if you like this analysis, I'm going to be doing these every day, and I appreciate if you like, follow, and subscribe. And thanks so much for watching, guys. I love you all, and we'll see you on the next one.